All right. Turns out, as if you were listening with Mark's market overview this morning, the largest buyer category in technology is, turns out, private equity. So I'm now delighted to invite up my partner, Mark Greenbaum, who will host a discussion amongst two private equity leaders.
Thanks, sir. We'll have Laura and Darren join us here. Great, thank you so much. We're calling this the money perspective. It's kind of a conversation about investors' perspective. I think Terry's right. We've seen very active activity among private equity in particular, being buyers of MarTech and ad tech space. So we have with us today two investors in the space. To my left is Darren Glatt. He's a partner with Searchlight Capital, a multi-billion-dollar fund, probably more known for traditional media investment, but has recently led a sizable investment into media math, so made a foray into the ad tech, MarTech space. And then Laura Desmond on the left, where to start? So, CRO of Publicis. We've got a lot of Publicis audience today. Ran Starcom, board member for Adobe, board member Capgemini, investor or advisor to LiveRamp. It turns out also does some investing in your spare time, both with Eagle Vista Partners as well as an operating partner with Providence Equity, where you've recently partnered on deals like Double Verify. So maybe just kick it off. Darren, what's your overall kind of take on the space?
Sure. So I think you mentioned we tend to be media investors, but also tech and telecom investors as well. So that's the world that I live in. And I think advertising increasingly is an area of the economy in which all three of those sectors are converging pretty heavily. Obviously, the reports of what consumers are consuming in terms of media, well, old media versus new media is well reported. On the telecom side, because we own lots of distribution businesses, the way consumers are consuming media is changing very drastically. And I think what's maybe, I don't know if it's familiar to this crowd, but the trajectory of video subscribers within the cable business, notwithstanding the chart you showed earlier of, I think the telco's up 13% year to date. What's really driving that is broadband proliferation, but what's really dragging it down, holding it back from over exceeding those performance levels is video subscribers declining. And I think advertising is a really interesting way for both old economy and new economy companies to help grow their growth and generate better growth and margin effectively. Right. And so I think I think a lot of the companies on the LUMA are great examples of how some of these old economy media companies can evolve and develop.
So the durability of advertising is kind of a big part of the thesis you're
very much so. Yeah.
Great. Laura, what would you say your high-level take on the sector?
Sure. Well, first, totally agree with the durability of advertising and brands and those companies that really focus on consumers and customer experience will win in the end. I think what's really interesting about this landscape, it's easy to get caught up in this company, this sector, the dog's breakfast of the marketplace, who's up, who's down. But when you really look at the big trends here, I think what's really exciting is as customer relationships move to the cloud, and customer experience will be throughout the entirety of the funnel, from brand all the way down to acquisition, it really gives brands who understand how to have relationships with consumers, who have the right repository of first-party data, and also know how to leverage the other second and third-party data aspects across the entirety of the funnel, will be able to move with speed, will really be able to understand what consumers and customers want in terms of their experiences and their journey, and should really actually be able to make the value exchange, which ultimately is what this marketplace is supposed to be about, better. And so it's a bit of a mess out there right now. I think Rashad did a great job of outlining it a bit, but it's also a great opportunity to see over, let's say, the next decade that, I think the advertising and marketing sector in general can start to add a lot more value to consumers' lives with what's happening in terms of customer data and relationships moving to the cloud.
Got it. So from the data side and customer identity. So from, as we mentioned, we've seen private equity involvement. Curious what your take is on that lens. We've seen in particular a number of kind of high multiple strategic type deals. We're hearing it more and more from the boards of private companies say, hey, maybe we should go get some of that. Is it time to kind of, let's go knock on every private equity's door? And Laura, maybe I'll get your take first as someone who's competing in this marketplace, maybe against folks like Vista from time to time. Have the models changed? Is private equity looking, shorter time horizon? Is it kind of a buy it high, sell it higher type approach? Or is it still, that disciplined financial model driving the valuation approach?
Well, I mean, Providence Equity is looking for great companies that have great fundamentals, great leadership, operate in sectors where they're doing well, but there's an opportunity for that sector to be, reinforced by tailwinds or change that can actually, turn positive cycles into more positive long-term secular cycle. And that hasn't changed. I mean, Providence has been around for 35 plus years. They're on Fund 8, and they've stayed successful by being really focused on the fundamentals. So I don't know if it's a fair comparison to say, oh, they're the new Ps, the new strategics, or right. They're looking for buy high, sell higher. Ultimately I think it's just down to fundamentals. Great companies in great sectors with great leadership. And then how do you think about where a company can go from a strategic standpoint, a pivot, or essentially taking advantage of something that the marketplace is now enabling, where the company has the right product market fit. So, you often will think, okay, what does an exit strategy look like as you're doing the due diligence? But that is really not the major focus. The major focus is, let's buy a great company with great fundamentals and great leadership and help make it better and help make it durable for the long term.
So still a disciplined fundamental approach, but
Totally.
maybe the fundamentals are just improving in certain sectors, driving some of those.
Totally.
Darren, you seen the same in terms of competing on price? Is it a challenge, or?
Not really. And we subscribe to everything Laura said in terms of the criteria in terms of our investment, but we take a bit of a nuanced approach in the sense that we're not chasing big multiples. We're not influenced by what smart people like Vista and others are doing. What we try to do is come up with creative solutions for companies. Obviously, we look for great companies managed by great teams who are on great trajectories, but what we do is we try to deliver founding management teams or entrepreneurs the ability to control more of their companies, but benefit from the capital we can inject into that. And so the investments we've made, both within ad tech and outside of ad tech and other forms of TMT, we have injected capital that kind of looks quasi-debt, quasi-equity, gives us great downside protection, doesn't require us to make a massive valuation bet along the lines of what some of the other private equity peers are doing, but also participate in some of the upside without necessarily diluting a lot of the founding management team's ownership stake in the company. So we take a bit of a more structured, nuanced approach.
Got it. And it's so thinking about, ad tech investing generally, I think it's been kind of written off for dead by many. And obviously the MediaMath investment was sizable. They have ad tech, they've got marketing tech components with both DSP, DMP assets. But what drove that thesis? And was some of that the novel approach to the way you structured the investment? And some of that also, contrarian view on timing?
Yeah, I love when people talk about contrarian. When I first made the investment in MediaMath and in ad tech, people kind of looked at me sideways and, almost like ad tech is a dirty word.
You know the history here, right?
Yeah, exactly. Terry brought up a great slide earlier in the presentation with, an industry being painted with one broad brush. I laugh because this is very similar to other investments we make in the sense that, I have a job. Private equity exists to take advantage of dislocations in the market and fundamental gaps in the fundamental understanding. You have a great LUMAscape. Millions of people follow it. You update it. There's 6,000 or so companies. You can't tell me that all 6,000 companies are losers, are bad companies. They're winners and they're losers. There's haves and have-nots. And so I spent, having experience investing into lots of media and tech and telecom companies, I've had some perspective over 20 years on how these industries evolve and change and move. And so on that basis, it took about 2 years to investigate the LUMAscape and all the companies within, talking to smart people like yourself and Terry and others in the space who influenced my view and came down to the view that, the DSP space is quite an interesting space within the overall ad tech landscape. And what I was looking for is a global, scaled, omni-channel player with great tech that's flexible, great brand and agency relationships, managed by great people, all the kind of key things that private equity would look for. And the one that really stood out among the rest was MediaMath for me, which is ultimately how I landed on an investment.
Got it.
Yeah, I really agree with that. I think it's easy to paint it with a broad brush, and you have to avoid doing that at all times. I think that there's some tremendous companies sitting in the ad tech and the MarTech space. It's about, you could get really excited by a sector or a particular innovation in the marketplace. You still have to look at it company by company, leadership by leadership. What are the opportunities, and place bets in a very specific way. And we found the same thing with Double Verify. I think that it's been a tremendous company, great to partner. I think Wayne's the CEO's in the audience today. Great to partner. We led that investment, and really right behind it came a flurry of activity. And now you're sort of looking at the brand safety, brand viewability, quality space in a completely different way, because the topic's now risen to a marketplace discussion where it was very quiet for the previous 8 to 10 years. So you have to really pick your spots, look at your companies, and be nuanced about it.
And what does your process look like, other than, like Darren, I'm sure, rigorously studying the LUMAscapes for sourcing ideas? But beyond that, in terms of, was part of that a thesis around brand safety and how important it would be given your experience, and then taking it from that lens, or was part of it, top down, who's out there doing what and what looks interesting?
Well, I think it can start a bit more macro than that. It can be a broad thesis around data, around measurement. What are the traditional parts of that sector? What are the newer, more innovative parts of that sector? And then you sort of start to narrow it down. I think in ad tech, it's sometimes overlooked, but the quality of the tech stack, the quality of the development of the product really matters. It can be the differentiator. It can be the edge. And so it's great to have service, and it's great to really drive on sales and marketing. Those are essential too. But I think that as ad tech matures, more and more marketers and more agencies are going to say, okay, we've been through the first wave of this, and we really know who shows up and calls on us from a sales perspective. But now that we really know what all this stuff is, we really want the product and the tech to work and to be differentiated. And so that's where we really have dug in, and for us, Double Verify really met all that criteria and more.
Yeah, not only does the thesis make sense, but does the tech actually work?
Exactly. And differentiating and get you to better answers. I mean, everybody here who's a founder knows that's where it begins and ends.
You both mentioned a little bit about durability of advertising, the background, thinking about that, does it work? The convergent television space is one that gets a lot of attention. Talk about advertising, and here it is, still probably one of the largest ad markets. It seems like it's been promised forever, and maybe it's fine. I want to get your perspective from an investment thesis, and just is it dream, is it reality, and what's been holding it back? Is it fundamentally the tech? Is it buyer habits? Is it entrenchment? What is it? And what's your overall view of the sector?
So I really appreciate, Mark, I was really appreciative of you asking that question in our pre-materials. I mean, putting my agency hat on again, we were always extremely bullish about the promise of addressable advanced television. And we knew 10, 12 years ago with some of the early tests that if you make the ads more relevant,
better experience,
it's a better experience. People watch more, and guess what? They actually go to the store and buy. So we saw study after study show that brand lift for big ubiquitous marketers, and they're like, tell us more. How do we get more? And the stumbling block, I think, over the last decade was the supply side. And I'm talking generally here, so I don't want to get bogged down into, okay, what's the difference between CTV and SVOD and addressable and data-driven. The bog was a little bit on the supply side. That has largely been removed as so many of the companies have really tried to get their house in order to be able to develop a strong sales side component to this. The demand side now is the one that really needs to be unlocked. And again, as a former agency person, what I can tell you is you really do have to pay attention to things like, what's the data you're using? How are you using it? How are you activating the plan? How are you activating the buy? Are the buyers equipped with the right software? Can you make the ROI translations between a $10 CPM and a $150 CPM?
Right.
All this stuff sounds a little wonky, and it is, but that's what I think the agency world and the marketing world is working through. So I know we've been saying for a decade, oh, it's coming, and everyone's laughed. But I think over the next 2 to 3 years, you will see a major unlock of the demand side. A lot of deal flow will start to, or a lot of deal and money will flow, and I think we'll, within a matter of the next 3 to 4 years, basically see not only that David Levy 10, 15%, but I think we'll see it in the 30 to 50% range for some marketers, for some audiences, for some brands, and the rest I think will really just follow quickly behind.
Darren, similar view?
Yeah, we think it's a massive opportunity, and one of the reasons, we had great confidence investing in media math and in ad tech more generally. So the linear TV business in the US is an $80 billion industry.
Right.
What we found, we've invested in more TV and cable companies than any media companies all over the world. And what we see is the TV companies who have these massive advertising budgets, are largely analog. They're antiquated analog selling local advertising in a very cumbersome and wonky type of way. Ad tech has this great solution. I think, the one area I'd probably maybe disagree to some extent from Laura is that I think the demand is largely there. I think the advertisers want to invest in television. They just don't have the means through which to, to key into, the connected TV and advanced TV. Linear TV is a great product, but largely on the wane, and that's where viewership is kind of deteriorating to some extent. And so to the extent the ad tech people can understand the TV people and the TV people can understand the ad tech people, I think you can come to an interesting solution. I think it's only a matter of time that those two sides begin to understand each other, and the tech and the incentives start to become more aligned for the money to flow. And it's not a matter of if, it's a matter of when. That
It's the tech holding it back and the functionality holding back.
I think I actually think the tech, at least from my experience, the tech is largely there. We're selling it today. I think it's largely the supply.
Okay.
Because you have, take Comcast, we're on the board of Charter, we've invested in Liberty, we know Comcast, Altice, all these companies, they just are, they have certain incentives in the way those salespeople sell advertising.
Some entrenchment about how things are done.
And they fundamentally don't understand how ad tech works. So you'll say to them, why don't we put a portion of your advertising through this system? And they'll say, well, my $30 CPM will go to $5.
Not my good stuff, right?
Yeah, it'll marginalize the value of my inventory. And you tell them, well, did you know that you have complete control over how your advertising gets lifted? You could set a certain minimum level CPM. You could set which advertisers advertise, and all these different controls. And they look at you quizzically and say, oh, really? I didn't know that. So I think is a fundamental misunderstanding of what's possible through this technology.
Right. Yeah. But it seems like there's been 10, 15 years to educate.
Well, it's like going from speaking English to speaking Japanese or Chinese. There's a whole retranslation that has to happen.
And then you get to fluency.
And then you get to fluency. And you need tech and data to be the underpinning of all of it. And that's been in start and stops. So there are real structural reasons why it hasn't happened.
Right.
But there is incentive, clearly, because it will improve the value exchange and people will come back.
Right. There's an inevitability to it.
It has to. It's inevitable.
Right.
But it's also, kind of how Jeff Zucker coined the, I don't want to trade analog dollars for digital dimes.
Yeah.
The demand side and the supply side are both trying to figure out, okay, if live and sports is where I can command the most premium, and advertisers still want premium content, how do I price this in a way that lets me take advantage of the maximum point on the curve?
Right.
And so I don't think it's a structural thing on the supply side, like they can't do it. They're trying to figure out their
how do I do
yield.
it right, and how do I not? Yeah.
It's more of a structural issue on the demand side because they're trying to figure out, how do I plan and buy this?
Yeah.
What do I do? And ultimately, they understand the need to activate through a platform and programmatically, but ultimately they will want to have control over those premium decisions a bit more too, and so they're working through that. But it is inevitable, and I'm excited about it.
Yeah, huge opportunity. Yeah, and I'm sure we can keep talking kind of all day. We're kind of running out of time here. One last question for either one. What's the biggest concern you have? What worries you most looking across the sector?
I think that what concerns me is, the ad tech and MarTech sector it really needs to grow up from a standpoint of leadership and strategy and discipline around the businesses that we run. There's tremendous opportunity, but it has to shift very strongly and better from ideas to really well-run businesses with a market thesis and a business strategy and a go-to-market that satisfies marketers and satisfies consumers.
From 6,000 startups on the LUMAscape to some more mature.
LUMAscape still exists. It's just really
Needs
getting
some evolution
to
and maturity.
high quality run companies. Yes.
Makes sense.
Yeah, I'm a student of Amazon. I really enjoy Scott Galloway's speeches here talking about the four and Amazon. And so the reason why I'm obsessed with Amazon is because it competes with many of the businesses I'm invested in healthcare and media, in cloud, across
increasingly
the
anything you can be invested in. Right?
Exactly. And what I find fascinating is that it has become this large $11 billion player, as you and Terry showed on the slides. Yet many consumers and companies just have a fundamental lack of trust. And so I worry about them getting overly big when there should be a viable independent alternative. For example, in the retail space, there's some very viable, established big box retailers who have better access to customers, online properties, physical presences, and the smart and the wherewithal to really rival what Amazon has created. And I worry that Amazon, will go unchecked. And so I think some of the smarter big box retailers are starting to think through.
More and more calls for breaking up tech, right? Even the investors are kind of calling
but I think there's a chance.
Regulation.
I think there's a chance. I think there's enough focus on independence and checks and balances on some of the larger players.
Got it. Okay. Well, very much thank you for joining us on stage today. Thank you for your time.
Thanks.
And appreciate it.
Good. Thank you.
Good job. Thank you.